Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Fantom, whose current price stands at the $0.024 mark, and here on TradingView the market is down by 0.73%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Fantom chart. So Fantom, from these low prices that he had been trading within, we saw a very nice impulsive movement taking us to an all-time high at around the $3.5 mark, in a movement that I've been terming as a higher Elliot wave count 1 to the upside. And after seeing the all-time high, we have been seeing no prices in this massive ABC corrective structure, which has now taken us back to around the $0.16 mark, in a movement that I've been terming as a higher Elliot wave count 2. And after seeing the low for that higher Elliot wave count 2, whatever we expect next is a bounce to the upside in the formation of a higher Elliot wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upside. And getting a little bit into the details of the formation of this Elliot wave structure, in the formation of a second wave, which is a corrective wave, we also expect to see an ABC corrective structure, which we have right here. And giving you a measure from the all-time high, you can see that Fantom is down more than 95%, meaning there are chances that we might have seen the low for this second wave right here, and there are also chances that we might have seen the bear market low, and very soon we can see that bounce to the upside in the formation of that higher Elliot wave count 3, which is an impulsive wave. And because of its impulsive nature, we also expect to see fractal waves in formation within that wave 3 to the upside. And for us to also say that we're in the formation of this wave 3 to the upside, this second wave low needs to continue holding above the wave 1 low, and in case we lose the wave 1 low, then there are chances of having an invalidation of this Elliot wave structure that I have right here. But for now, this is still a valid Elliot wave structure to the upside, and having that in mind, I can sketch a minimum target area to the upside in the formation of that wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5.9 mark, and that is the minimum that I will expect that wave 3 to the upside to do. And that is my long-term scenario, which can only play out in the next bull market, and once we see a recovery here on the Fantom chart. And jumping to the 1 hour chart for further analysis, and also give you the short-term scenarios that I'm expecting to play out basing on the chart patterns that we have information over here. Here on the 1 hour chart, after seeing our low at around the $0.16 mark, we have been seeing a very nice bounce to the upside in a movement that has been obeying the Elliot wave structures. And initially in my previous videos, I had an Elliot wave structure that has now reached the invalidation point, and if I sketch it out, we can have, I had it having that as the first wave to the upside, then a second wave, then this was my wave 3 to the upside, and I was expecting a retracement over here in the formation of this wave 4, then see that bounce to the upside in the formation of that wave 5 to complete a higher Elliot wave count 1. But according to the Elliot wave guidelines, a wave 4 should not retrace into the wave 1 high, which is the case over here. You can see my wave 4 retraced into the wave 1 high, reaching the invalidation point, and because of that I have to remove this Elliot wave structure and have a different Elliot wave count here on this chart. And that different wave count is assuming this is my first wave to the upside, and because of its impulsive nature it fits to be a wave 1. Then whatever we are seeing over here is the retracement to the lower side in the formation of that second wave. Then I'm expecting a bounce to the upside in the formation of a wave 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upside, completing the formation of that higher Elliot wave count 1 to the upside. And getting a little bit into the details of the formation of this Elliot wave structure that we have right here, and get to see whether this second wave right here has done the minimum that we expect a second wave to do by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gives me a minimum retracement area to the lower side in the formation of that second wave between the fib level 0.5 and the fib level 0.618, which perfectly lies between the $0.21 $1 mark and the $0.2 mark. And if I remove the Fibonacci's, you can see that we have come down into that target area. We have fully maximized the target area between the fib level 0.618 and the fib level 0.5, and we lost the fib level 0.618 over here, but we are still holding above the fib level 0.78, meaning this is still a valid second wave to the upside or to the lower side. And very soon I'm expecting a very nice impulsive movement to the upside in the formation of this wave 3, and first sketching out a minimum target area to the upside in the formation of this wave 3 using a trend based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $0.35 mark, and that will be my minimum target area once we see that impulsive movement start over here in the formation of this wave 3. And getting back to the formation of this second wave and give you a chart pattern that is in formation right here after seeing the low for that second wave. If I zoom in, there's a chart pattern that we have information right here, which is a triangle. And if I connect the lows like that, we can connect the lows like that. Then we can also connect the upper side, that is the highs like that, and you can see the price of Fantom has continued to push to the apex of this triangle, and we are seeing the breakout to the lower side, and there are chances that we might continue pushing even lower. Maybe there is still room for us to make a new low in the formation of this second wave, or maybe the low is still not in and there are chances of still making a new low before we see that impulsive movement to the upside in the formation of that wave 3. And sketching out our minimum target area to the lower side out of this chart pattern that we have right here by getting the height of the triangle like that, then placing the height at the apex of the triangle where we are seeing the breakout. That gives me a minimum target area back to around the $0.19 mark, and once that happens, then that could be the low for that higher that second wave. Then from there we can expect a very nice bounce to the upside in the formation of that wave 3 to the upside. So let's be patient and see how that plays out, and I'll keep you updated on that. And getting back to the indicators to see what movements will be supported here on the RSI. On the RSI we are trading at around the 40 mark, meaning you have massive room for us to support any movements to the upside, and also any movements to the lower side will still be supported. Also taking a look at the MACD, we had printed a bullish crossover here, but you can see we are seeing a bit of a decrease in the buying momentum, meaning we might be able to print a bearish cross, which we have done here on the MACD. You can see we have printed a bearish cross, but we are seeing a bit of we have not yet gained the selling momentum, and once we gain the selling momentum, then there are chances of seeing the breakout out of that chart pattern that I have shown you over here, which is a triangle, taking us back to around the $0.19 mark. So let's be patient and see how that plays out, and I'll keep you updated.